Good morning. Welcome, everybody. On behalf of the Grameen Foundation, the NGO Committee on Financing for Development, and the Atlantic Council. My name is Bart Oosterveld. I direct the economic work at the Atlantic Council, including our Inclusive Growth Initiative that this event is part of. We've partnered with the Grameen Foundation and the NGO Committee to bring you this session. Partially because we share a conviction that it's beyond time to document the economic and moral imperative behind these issues, and time to share best practices and push progress with a bit more urgency. We have a top-notch panel to discuss this that the moderator will introduce. I was asked to remind you that this is on the record. Not only is it on the record, we're being filmed. So if you don't want to be filmed from behind, move to the side. Anita Thomas will moderate this panel and introduce the panelists. She's the chair of the NGO Committee on Financing for Development and a representative of the Economic and Social Council at the UN. So Anita, over to you.
Thank you. Good morning, everybody. Thank you so much for being here. As Bart said, we are taping the event today, so just wanted to make sure that you are aware of it, and all conversations are being taped. So thank you and welcome. I chair the NGO Committee on Financing for Development, as Bart said. We are a committee of the Conference of NGOs in Consultative Relationship with the UN, and we were established in 2003. And the purpose of the committee, since its establishment, shortly after the Monterey Consensus, is to ensure that financing for development discussions take place at the UN from an NGO perspective. So we develop strong advocacy points, and we advocate all the way through the year to ensure that financing for development discussions at the UN give a specific focus to all the areas that we advocate for, and mainly meaning social protection, financial inclusion, as well as the human rights component of financial inclusion. So we are very thrilled to be at this table today, and just wanted to give you a brief background about the work. So how did hello, can you hear me? Yes. How did the current organized financial inclusion strategies come about? In 2015, the UN General Assembly adopted a resolution stressing the importance of financial inclusion as a key tool for implementing development goals under Sustainable Development Goals and the Addis Ababa Action Agenda. The Addis Ababa Action Agenda is very clear on financial inclusion and a strength and an initiative to ensure that the most marginalized are able to rise from there, and to ensure that they are economically empowered and have the advantage to live just like anybody else. And so it's very clear in its mandate, and it says that we will work towards full and equal access to formal financial services for all. We will adopt or review our financial inclusion strategies in consultation with relevant stakeholders, and will consider including financial inclusion as a policy objective in financial regulation in accordance with national priorities and legislation. So as a follow-up to that, in 2015, through the Universal Financial Access 2020 initiative, the World Bank and the IFC has committed to enabling 1 billion people to gain access to a transaction account through targeted interventions. Now, the World Bank has set a target to help enable 400 million adults to be reached through knowledge, technical, and financial support, while IFC has set a target to help enable 600 million adults to be reached through investment and advisory services. Around 2 billion people still do not have access to financial services, and out of that, about 1.6 billion have access to mobile phones. So this is an incredible initiative on the part of the World Bank as well as at the UN level to ensure that the most marginalized and who have access to mobile phones, to ensure that they're able to reach them through mobile banking. So many of our panelists today will share that and their initiatives and the expertise they have in the field. So it's very exciting for us to be here today. And financial inclusion on the globe is rising globally, accelerated by mobile phones and the internet, but gains have been uneven across countries, and men remain more likely than women to have an account. This is according to the World Bank report. So again, our speakers from World Bank will speak about this and highlight as to what are the strategies that need to be done to ensure that we ensure that we reach the goal of ensuring that women have access to financial services just like men. and Leading to Financial Inclusion Global Initiative. So leading from the Universal Financial Access is the next initiative that came about is the Financial Inclusion Global Initiative. With 3 years to go, this is a collaboration between World Bank, the Committee on Payments and Market Infrastructure, the Telecommunication Union, and funded by the Bill and Melinda Gates Foundation. It's an initiative to ensure that the 3 pilot countries have come about: China, China, Mexico, and there's one more country, China, Mexico, and Egypt. Yes, we are approaching Egypt to see if they will speak with us on a panel next week at the UN, and to ensure that these are pilot countries so that to see how this initiative can be advanced. So in the 3 year that is leading up to the Universal Financial Inclusion, Financial Access to 2020 initiative, that more people are brought into the realm of financial inclusion. And digital payment systems used for government payments of pensions, salaries, and welfare benefits will reduce opportunities for corruption. And a digital payment system also enables increased accountability and transparency in all transactions in and out between citizens and states are recorded. In a paper on smart cards in India, the researchers found that by digitizing government transfers, bribe demands were reduced by 40%, resulting in increased payments received by beneficiaries. So financial systems are a key tool to ensure no one is left behind. Without access to formal financial services, people will have to depend on informal mechanisms for saving and protecting themselves against risk. In rural parts of the world, people buy livestock. Like for an organization like mine, the Virginia Gildersleeve International Fund, we fund projects for the economic empowerment of women and girls at the grassroots. And many of our grantees have no access to a bank account. They deal in cash transactions, but they have mobile phones. So these initiatives are very helpful for reaching the most marginalized. Right? And so, especially in situations where women is the sole income earner or the main income earner in a household, and the lack of access to an organized financial system, as well as lack of financial products designed with micro enterprises and SME in mind, so that the micro enterprises can move to SMEs and beyond. So a country that has been a trailblazer in the financial inclusion agenda is India. But in order for any initiative at the international level, at the country level to take place, it is important that there is strong political will. And India has been a pioneer in this, where the Prime Minister's initiative to ensure the Prime Minister's Jan Dhan Yojana initiative, and which has ensured that financial inclusion strategies translate all the way to the grassroots. And so through that initiative, Grameen Foundation is going to share with us their initiatives and strategies to ensure that the people who are most marginalized are being included in the financial systems. So I will now introduce my first panelist, Prabhat Lab. Prabhat is a seasoned international development professional with 23 years of experience in livelihood, financial inclusion, and enterprise development sectors across over 24 countries in Asia and Africa. Currently, as CEO of Grameen Foundation India, Prabhat provides strategic leadership in India on the financial inclusion initiatives. Earlier, Prabhat worked at MasterCard Foundation, Canada, where he managed a portfolio of programs to facilitate access to saving services for low-income communities across 18 countries in Africa, reaching several million clients. A key focus of his work has been to address needs of populations facing exclusion account of being too poor or being too far from financial institutions, and design strategies for their inclusion. Prabhat, I give the floor to you, and I welcome you to make your very interesting and fascinating presentation. Thank you so much.
Thank you, Anita, and good morning, everyone. So before actually I start, maybe you wanted to play a short film? Yeah, so it's like a 4-minute video, which will give you, which will help you getting transported to the context that I'll be talking about and help you visualize and contextualize what I'm talking. So we can maybe start with that.
In a small locality on the outskirts of Delhi, it was time for change.
बस औरतें क्या कि घर में खाता खोल के बस बैठ गई 2-2 3-3 साल हो गए औरतें बैंक में नहीं गई.
It is a change that could make a big difference.
खाता हो या एटीएम ओटीएम किसी बारे में कुछ भी पता नहीं था.
खुलवा तो लिया बड़े शौक में कि हम पैसे जमा करेंगे, पर हमें कुछ आता ना जाता था.
And it began with an insight that turned into a solution.
Talking to the women about how they can benefit by using the bank account is one of the most critical parts.
मेरे बैंक अकाउंट को खुले हुए 6-7 साल हो गए. एक तो यहाँ से साधन नहीं था, अब बैंक चले जाते तो वहाँ जा कर के बोलने का तरीका नहीं, हमारे को बात नहीं समझ में आती, कहाँ से आई है, चल पीछे हो जा। तो हम कहते भैया हमारी कोई वैल्यू नहीं है।
A joint program funded by JP Morgan and conducted by Grameen Foundation India with Institute of Rural Management Anand researched the financial habits of low-income households. It found that banking behavior could be changed despite the problems faced by women like Kusum.
Within those two boundaries of access and capability comes the issue of the relevance of bank accounts for managing your financial lives. And that really is an area which was not understood well before we undertook this research. But when you provide that information to the women, they are in better control of their own household finances and their own financial lives, which we believe will lead to better outcomes for their households and for their community.
It was decided to explore the real potential of these bank accounts and associated financial services.
Distinguishing feature about this particular project is that it took a three-pronged approach of focusing on the financial goals, focusing on the financial capability of the clients, and the capacity and soft skills of the frontline workers.
The frontline workers were given classroom training and the mobile-based Grameen learning app, which helped them provide goal-oriented and relevant information to the clients.
और क्लाइंट का देखते हैं उसको क्या ज़रूरत है, हम ये देखते हैं कि हाँ भाई इसको ये फ़ायदा है, तो उसके बारे में उसको समझाते हैं और उसे मनाते हैं उस चीज़ करने के लिए। सबसे पहले तो उनको हम साइन अप फॉर्म भरे उनके, और उसके बाद जो स्लिप है उनको देते हैं कि जब हम 3 महीने आपसे जुड़े रहेंगे तो इसको संभाल के भी रखना आपको। जो पर्स देते हैं वो तो खुद यूज़ करेंगी, उसमें क्या है पैसे वैसे रखना, उनकी जो 3 लक्ष्य होती है वो जो स्लिप होती है वो आगे होती है सामने, ताकि वो जब भी पर्स खोले तो उसे वो अपने लक्ष्य दिखाई दे, तो उसको बार बार वो पर्स याद दिलाता है, वो स्लिप भी याद दिलाती है कि हाँ मुझे लक्ष्य पूरे करने अपने।
By training women in the right digital financial services, this program showed them how to take charge of their finances.
ATM चलाना सीख गए। ATM मेरी समझ में ही नहीं आता था, और सुकन्या का नहीं हुआ था तो मैंने अपनी पोती का करवा दिया।
जाके मैंने अपना खाता खुलाया, उसमें जमा किया, ATM बनवाया, ATM चलाना सीखा, बचत करना सीखा।
With frequent frontline worker check-ins and interactive voice response calls, the program kept its beneficiaries engaged and motivated to meet the financial goals they set for themselves.
We do find this project to be extremely successful. This was designed as an action research project, but we have gone beyond that. We have actually used those new insights to design an intervention model which can lead to changing the outcomes with regard to account usage. And the insights that we have gathered from this program are of huge relevance to the entire financial inclusion industry, which it can be used to achieve really, really significant results at scale.
हम पतियों पे निर्भर देंगे, हम बचत करेंगे, जमा करेंगे, निकालेंगे, मेरा मन करेगा हम निकाल लेंगे।
तब मैं अब इस समय बहुत वो सोचती हूँ कि मेरे मुकाबले कोई है नहीं, मेरे को बहुत खुशी मिलती है।
So, yeah, if you can put on, can I use this clicker for? Yep. Okay, which one? This one. All right. Okay, thank you. Yeah. So I have titled this presentation "Financial Inclusion at an Inflection Point." I actually want to title it, financial inclusion going through a midlife crisis. I don't know if you have, thought about it that way, but when I have been working in financial inclusion and enterprise development for over 20 years, and now I think we have reached a point where we are really asking, okay, financial inclusion towards what? How does it help improve lives of the people? How does it help people build assets and improve their resilience and improve their livelihoods and incomes? So here I'll talk about some of these challenges and then perhaps a way forward. Last 15 to 20 years, we have seen massive strides being made by the financial inclusion sector. And that we can capture, that story of 15, 20 years in this one slide through these 4 major mega trends. One is the trend towards formalization. So informal, NGO, MFI is kind of, making way for regulated and formal entities doing microfinance at a much bigger scale. And this becoming part of mainstream financial markets. Commercialization, where donor capital has given way to, commercial capital, debt and equity. and also from only looking at customer impact to enterprise sustainability. The third mega trend that we have seen in microfinance, financial inclusion, is the individualization, because microfinance and especially the Grameen model and self-help group models start off as group-based methodologies, but now we are seeing emergence of more and more individual-driven model, especially with the emergence of fintech and data-driven applications. So that's a third mega trend. And of course, fourth is the digitalization, where you have mobile banking, digital payments, and fintech-based business models. So that, in one slide sums up the mega trends in the financial inclusion sector over the last 15 years. And that has resulted in a rapid increase in account ownership. And this data comes from Findex, which Leora kind of has been writing for last decade, almost 3 editions. And this data comes from India, and 3 data points: 2011, 2014, and 2017. Account ownership at the aggregate level and also for the men and women. If you just look at the aggregate level, you'll find that there's a massive jump in account ownership, and this is for people above 15 years of age. So massive jump in account ownership as a whole. Also for men and women, there's a slight decrease in the gender gap in account ownership. So that's a big success story which we all must celebrate. Like Anita was talking about this Pradhan Mantri PM JDY scheme in India, which has led to over 300 million accounts being opened in a short span of like 3-4 years. And now financial bank account ownership in the country is at above 70%, as you can see from this slide. However, it has not led to corresponding behavior change to save. So this data point is about people who have saved any money in past 1 year. And you can see, the number is like almost 20% in 2014, and it has actually reduced in 2017. And it's about saving anywhere, not just in a bank account. And even fewer people are saving in a financial institution. Of the people who are saving, there are only 20% in 2017 who are saving in a financial institution. Same pattern we see in borrowing. People are borrowing, 40-50% people are borrowing, but not from formal sources. If you look at the formal source borrowing, it's minuscule. So people are still reliant on informal sources of borrowing from friends and family and money lenders and whatever. So the question is why? All of this massive work that has happened on the financial inclusion in terms of building these sophisticated digital and digital platforms, work on the national ID system with 1.3 billion people having this national ID called Aadhaar, and so many hundreds of millions of people having bank accounts, 1 billion people having mobile phones, and still an impact will not take place unless people start using these services on a regular basis. So as we delve into this, as to why we are not seeing corresponding behavior change, we have to look at, how financial inclusion works. And there are basically 3 pillars of financial inclusion. One is your policy and regulation side, which is led by the government, which determines the competition, the pricing, the consumer protection, etc., which allows or enables different kind of institutional formats to exist and flourish. And the second is your supply side, which is the markets, which determines what kind of products and channels are available to the customers and at what cost, at pricing. And the third is your demand side, where you talk about the client capacity, your awareness, your skills in using various products, your trust of the products and the institutions, which influences your uptake and continuous usage. And in the last 10 to 15 years in India, what we have seen is that a lot of work has happened on the policy and regulation side. The market players have been very, very aggressive and doing a lot of work in coming up with new innovative products and channels. But we haven't seen a corresponding amount of work being done on the demand side, on the consumer empowerment, on the consumer capacity building, and that's the weak link. So you are seeing that people have bank accounts, they are not using it. People have access to financial institutions, they are still borrowing from informal sources, right? The demand side challenges, what these challenges are, I'll try to sum up, in just a few bullet points. So inadequate investment in client capacity building. I have been working in this sector for 2 decades, and we have always been working on institutional strengthening, build the capacity of institutions, their leadership, their institutional systems, products, technology platforms, whatever. The knowledge, convenience, affordability, and suitability of the products, they all are kind of influencers of demand. Use cases, customer need versus product positioning or segmentation. So if you ask somebody, okay, do you need insurance, or do you need a bank account? The answer may be no, because why do I need a bank account? In fact, Leora's study, they ask, why people don't save. They say, okay, I don't have enough money to save, or I don't need to save, or whatever. A lot of people kind of come up with those kind of reasons. Trust of institutions and trust of new digital channels is kind of a big barrier. The smartphones is still a largely urban phenomenon, largely a phenomenon limited to the upper and middle income segments. And also there's a big gender gap in smartphone ownership and also mobile phone ownership. And digital services are yet to prove that it can lead to reduced cost for the users and for the providers. The promise is there, but we have not yet seen the proof of that. And finally, the household livelihood profile influences demand for financial service. I don't think it's quite obvious, and in fact, our research kind of clearly shows that there's a very clear correlation between what kind of livelihood activity you have versus what kind of financial services you use. So those are kind of demand side challenges. And how are we addressing this challenge? So I'll talk about some examples from Grameen Foundation India and some of the work that we have started. So we have come up with this model called Grameen Mitra. Grameen is a villager. It also, of course, it corresponds to Grameen Foundation's name. Mitra is a friend. So this Grameen Mitra is a kind of self-employed individual, a young woman from the community who we recruit and we train, and she provides a range of financial services and non-financial services to the customers. The model achieves two important outcomes. One is convenient access to relevant services for low-income communities at the doorstep in the village. And two, it also leads to employment creation for these young women working as Grameen Mitras. And here's a picture of one of the Grameen Mitras, Harsha. And there are, in last 1 year, we have created a network of over 200 such Grameen Mitras who are currently serving a population of, like 280,000 people. What the Grameen Mitras do is they work on three fronts. The first, of course, starts with customer education, because, of course, that's a big barrier, knowledge, awareness, that leading to trust. And then they help in, customer acquisition and onboarding. And finally, ongoing customer services, cross-sell and upsell. And this, just to clarify, Grameen Foundation or these Grameen Mitras are not providers of financial products and services. The providers continue to be banks, microfinance institutions, insurance companies, or others. We have a platform which we partners with a range of financial service providers and bring their products and services to the community, which is convenient to access and easy to onboard. And the most important point about this is that we have not limited it to financial services, because we see that the big barrier being, of course, your economic and livelihood activities, which influences what kind of financial services you use. So through this Grameen Mitra platform, we are bringing, financial and non-financial services. Some examples being, okay, the starting point may be just making some digital payments, and then you kind of open a bank account, and then you bring non-financial products like agricultural inputs to the community, you bring insurance products to the community, you bring water purifiers, sanitation kind of products. So that's how it kind of looks at your entire lives and livelihood. I'm done, yes. Just 30 more seconds. So based upon that, what we look at the prerequisites for this sustainable business model to advance financial inclusion, which actually leads to impact creation, is that earlier we were talking about financial inclusion leading to economic inclusion and customer impact. But I think the time has come where we need to reverse that and say that, okay, financial inclusion is kind of, in terms of like bank account ownership is almost done. But to move further and to go beyond your midlife crisis, what you need to now focus on is economic inclusion, which will then lead to uptake and usage of the financial products. And for this kind of model to sustain, there are three elements. One is the customer impact, customers benefit, whatever. The second is these kind of independent agents like Grameen Mitras, they becoming self-sustaining so that they are able to kind of continue working and serve the community. And finally, then you look at the enterprise sustainability. And when you have fixed all of that, then you can say, okay, you have sustainable and scalable model to advance financial inclusion and leading to economic inclusion. And this is how it is linked to your SDG pathways, especially with regard to SDG 1 and 5, but also now you have SDG 8, 10, and 17, where you talk about partnerships and decent work and reduce inequalities. So thank you.
Thank you, Prabhat, for that very insightful presentation and for highlighting and asking the question, financial inclusion to what end? Is it to build people's assets? Is it to lead to economic empowerment, especially highlighting the importance of economic empowerment? And also for highlighting that the regulatory framework is there, the products are there, and how is it that people are not reaching where they're supposed to be reaching, right? So the importance of capacity building, importance of digital literacy. Thank you for highlighting all that and for the work that you do, and especially the Grameen Mitra initiative. So it's interesting, it's fascinating, and so we look forward to learning more and observing it more as we go forward. So thank you, Prabhat, for sharing your insights. I now go to Dr. Michelle M. Thompson. Dr. Thompson, it is very interesting how Dr. Thompson came about on this panel. The committee had organized a panel at the UN last year on financial inclusion. She saw the concept note for that. She approached me and she said, this is what I do with the MasterCard Inclusive Initiative, and I would love to have a conversation about this. And so we started talking, and then we put together this panel, and here is Dr. Thompson. So I'm so thrilled to welcome Dr. Thompson to the panel, and also to give a brief introduction. We have her extensive bio. She has done incredible work, but I would just highlight a few items from her bio. Dr. Thompson is an associate professor at the University of New Orleans in the Department of Planning and Urban Studies. Dr. Thompson teaches courses in applied geographic information systems, community development finance, housing, transportation, urban studies, neighborhood, and land use planning. She earned a master's in regional planning from the Cornell University of City and Regional Planning with a focus on community development and spatial analysis using geographic information systems. And one thing very fascinating is the work that she's doing with her husband. In 2009, Dr. Thompson and her husband Kevin created Crossworld Africa Inc., which provides pro bono cultural economic support to families in sub-Saharan Africa. Dr. Thompson is also the principal of Thompson Real Estate Consultants, LLC, a real estate research and education firm. And currently, Dr. Thompson also serves as a data fellow with the MasterCard Center for Inclusive Growth, focusing on financial inclusion and local economic empowerment in New Orleans, Louisiana. So I'm very pleased to invite Dr. Thompson to the panel. Thank you so much for being here. Thank you.
Thanks so much. So I saw you pop up, so I'll stand up here. So good morning, everyone. In New Orleans, we say good morning. I hear back, good morning.
Good morning.
Okay, now we're awake. This is going to be a fast fly through, but you know that you'll be getting the PowerPoint and the information. And thank you for the introduction. So I do wear many different hats, and I just want to follow up just because the Crossworld Africa is, again, the pro bono project that my husband and I work on. And two of the projects that that we're focusing on that relate to what you just talked about is one in Kibera at the YMCA. Just last year when I went there, I saw that there was a teacher trying to show young ladies how to do math conversions of uniforms on a chalkboard. And the sewing machines that they were using were still, if anyone knows, those the ones that pedal, right? So one of the projects that we're doing this year, last year we bought 10 sewing machines, and this year my husband's going back, and we're actually starting a program so that they have bank accounts when they are going to be out and trying to sell their products. We also started with 5 cows in 2009, and and the first calf goes to the next family in the village. And this is a project led by women. And this year we just received funding. We'll be not selling. We received funds to provide 23 cows. So on with the presentation. You could see there's a lot of titles they have here for me, but so I do wear a lot of hats and don't get a lot of sleep, so don't mind the red eyes. So as associate professor, what I'm trying to weave into this story is the work that I do at the university, the passion that I have for trying to democratize data is the reason why last year I was working with New America and MasterCard Center for Inclusive Growth funded my work there. My goal there was to really try to see how we can get the information and data that is available at the local level and use the resources of the university and the students to be able to show how local development, community development can happen. But the concern and the issue is, because I am not a New Orleanian, but I moved there after Katrina, there's a lot of data that's available. But where do you get it? How do you get access to it? There's plenty of information, big data and small data. But what I was most concerned about is the data, the private data from nonprofits that really, they want to be able to figure out how can we get that information and the story out to the community. So the Neighborhood Development Foundation, I've been sending interns there for a while. We all talk about trust. So by the time after 5 years of working there and providing resources, I said, what is one of the biggest concerns that you had? Well, at the time, Neighborhood Development Foundation had received some information from Housing and Urban Development. They're not going to receive any more funding for their first-time homebuyer program. So and I'm going to go through some of this. I'm going quickly as I can, but NDF, a Neighborhood Development Foundation, is not a foundation. It's actually a homebuyer training program, and they've been doing this homebuyer training for over 30 years. A lot of information had been collected when people would come through the door. Age, income. Most of the people that were coming in, this is a program for people who are unbankable, who want to become bankable, who have low or no credit, and they want to become credit worthy. But HUD said, we're not really sure if your program works. How can you show that? How can you demonstrate that? So that was the challenge. How do we take 30 years of information that's in paper, programs and systems that don't work together, because every year Fannie Mae came up with a new program, a data system, and they wouldn't work together, and put this information to tell their story. So that was the project that I was doing last year, and there's a continuation this year as a data fellow. The challenge that I gave to MasterCard Center for Inclusive Growth, which Lenore and I are both data fellows on this year, was to say it's great that we have public information, a lot of census information. It's wonderful I'm going to do this project to get community information, but what about MasterCard information? So you can just imagine they just about fell over and said there is no way. With all the data that's out there, it's being taken for good and not so good, that how can we actually provide data that can be used by researchers in the community? So that's my project from last year to this year. It took 9 months to get a data sharing agreement, and the idea was to be able to look at 3 slides, which I cannot present today, but because there's a lot of data, there's a lot of attorneys, we're talking about systems that don't yet work. But the exciting part is that the anonymized and aggregated data that MasterCard has agreed to allow me to work on, again, last year spent 9 months, this year spent about 10 months on a non-disclosure agreement, but in February of this year, 50 of MasterCard's best and brightest data scientists came together, and we were able to get 5 years of data for New Orleans. If you can imagine, every second of the day, every industry, all of the transactions for MasterCard, and put them together. The goal now is to take that information. We're going to look at 3 different areas in New Orleans. Where are the investments going to happen? Where are the opportunities for small business and housing? And where are the tourists coming through? Because that's New Orleans industry. So after it gets out of data privacy, data security, and a whole bunch of other attorneys, in very short order, MasterCard will be able to provide, and I'll be able to provide to help the city look at where investments are happening, where they could happen, to complement the data that we were able to develop as part of this NDF project. So it's forthcoming. So again, NDF started a financial fitness program now about 12 years ago, Homebuyer Education about 30 years ago. I already mentioned what some of the problems were. So first of all, to allow someone from the outside to come into an organization to tell their story, to move things from Excel to a data system, to a geospatial data system, what that took is a pro bono professor encouraging, through of course the A in the grade, right, to get about 30 students to get out in the field to collect information, but then to get some students inside to be able to train them to collect information in a proper way, and to understand that we can standardize this methodology. And it's not unique, it's really not earth-shattering, but we can make sure to take this model and every community across the country can follow this if you have the willing partners. And that's what that's what I wanted to really drive home today, is you have a wonderful opportunity to engage free labor. It's called students. And so I'm hoping that in order to break through some of the walls, we've got the MasterCard, we've got the systems, but use the university to create the stories that can be told by the community. So here's the story in 2 minutes or less. After taking the information and putting it in a data system, we were able to find out that in terms of the credit scores, and again, these are some folks who are in service industry, cash economy, and during their financial education program, some people immediately could increase their credit scores, but by the time they became bankable, the credit scores went up to 667. I'm not going to ask you what your score is, but let me just say that it's really important. It's a pretty good score. Since 1986, NDF has screened 14,713 people. There are only 4 people on staff. So what that means is they collect information on the application. They bring folks in and say, we're not sure if you're quite ready for homebuyer, but maybe you're ready to learn how to save, put together an account, understand what the barriers are. Don't go to unscrupulous folks. Maybe home banking is not the best way to do it. Okay, so the number of people that finished the program were 1,189. There were 8,551 that completed the homebuyer program. So if you were at least increased your credit score, they went through the process of how do you buy a home? Why do you buy a home? What's a real estate appraiser? What's the best house to pick? How do you maintain the home? How do you fill out the application? Between this 30-year period, out of the number that I just spoke about, 3,453 became first-time home buyers. That's phenomenal. This is just one organization. And the most important thing that came out of this information is that of the folks who had mortgages, the financial impact, not economic, because we couldn't look at all of the issues related to the purchases. There was over $223,981,061 of financial impact. Again, close to 4,000 people purchased a mortgage. You have that amount of impact, and then we were able to show it spatially. So in New Orleans, the story now that this nonprofit can tell is that our homebuyer program works. You can take people who are, as they say, that they would typically be risk averse. The banks would be risk averse, low to no credit, and we can see that they've made an impact across New Orleans. And this is certainly post-Katrina in an environment where these are many people who are in service industry making $2 an hour. So that is my story, and there'll be more to come on the other issues related to financial inclusion. Thank you.
Thank you, Dr. Thompson, for highlighting the importance of democratizing data and the importance of systems speaking to each other, as well as data sharing and building the capacity of the community, which is essential. But more than that, I am impressed with the way you work with young people, because across the UN, what we hear is that the importance of bringing youth to the front, because this is about their future. So for them to get engaged in the process of financial inclusion, as well as their sustainability, to ensure community sustainability is key. And I'm happy that you share what you have shared, and I wish you could have shared more, but you've been telling me about the attorneys over our conversation, so I'm glad you have all this information with us, and thank you for the PowerPoint. So I will go to our next speaker, Dr. Purva Khera. Dr. Purva Khera is an economist at the International Monetary Fund's Monetary and Capital Markets Department. She began her IMF career in 2015 when she joined the India team in the Asia and Pacific Department. Purva has a deep knowledge of gender analysis and economics and has been actively engaged in assessing the microeconomic impact of gender inequality and informality with a focus on India. She holds a PhD and an MPhil in economics from the University of Cambridge. Dr. Khera will be sharing insights from a recently published IMF working paper, Closing Gender Gaps in India. Does increasing women's access to finance help? This paper builds a comprehensive general equilibrium model to investigate the long-run microeconomic impacts of closing India's gender gaps in access to finance. Results suggest that the combining gender-targeted financial inclusion policies with policies that boost formal employment could boost India's GDP by nearly 7%. So I really look forward to hearing you. Thank you so much for your presentation.
Thank you so much, Anita. Of course. First of all, I would like to thank the organizers for giving me the opportunity to present this paper here. I'm actually very, very happy about that, so thank you. And so, as Anita said, that I will be presenting my working paper. So quickly to jump into the question that the paper addresses, so it basically addresses the question, what is the impact of increasing access to finance for women entrepreneurs? And when we talk about impact, we look at two aspects. So one is the macroeconomic impact. So what happens to GDP, what happens to unemployment, what happens to the share of the formal versus the informal economy. And then the second aspect is women's economic participation. And this looks at, what happens to the number of female entrepreneurs, what happens to their participation in the labor market, as well as what quality of jobs do they get in terms of whether they're employed formally, informally, and also looking at wage gaps. So just to give you a quick outline, first I'll just touch upon why this study is relevant to India. Then I would touch upon why should policymakers care about financial inclusion. So this would look at the macro perspective where I'll present the model and the findings. And then very quickly we'll go to the policy implications, and this would again focus on India. So why this study is relevant to India? So first question we ask, are women financially included? And as I think Prabhat has already touched upon this. So if you look at the left-hand side chart, it shows you the share of males and females who have a financial institution account. And we find that the share of males that have a financial institution account is higher than females. Now this data is from 2017 from the Global Findex, and as Prabhat showed, India has made a lot of progress in terms of the share of people who hold a financial institution account, and that's because of the PMJDY initiative that the government took in 2014. Now there's a lot of hope from digital financial services, but if you look at the right-hand side chart, we see that there are still quite substantial gender gaps in terms of access to a mobile phone. And even though people have financial institution account and hold a mobile phone, we find that the key challenge in India, and I mean, I'm again repeating, Prabhat has already covered this, that it's the adoption and usage of financial services. So a lot of these PMJDY accounts are zero balance accounts or they're dormant. And even in mobile money accounts, only 3% of males actually use a mobile money account, and the number for females is 0.8%. So even though people have mobile phones, they're not using a mobile money account. In terms of women's entrepreneurship, less than 15% of entrepreneurs in India are females, and they tend to be very small firms. So 98% of female entrepreneurs are micro enterprises. 90% of them operate in the informal sector. And as the left-hand side chart shows, that even the ones that hire, the average level of employment in female-owned businesses is much lower than males. In terms of how do they get their financing, so 80% of female entrepreneurs rely on informal sources of finance. So that's either self-finance, family or friends, or money lenders. So I mean, access to finance is a big constraint for women entrepreneurs and for women-owned businesses. In terms of whether they're participating in the labor market, India has the third lowest female labor force participation rate in South Asia after Pakistan and Afghanistan. Female labor force participation is 1/3 of male labor force participation, and it has been declining over time, as you can see from the chart on the right hand side, which is worrying. The reasons, so the literature has looked at why female labor force participation has been declining over time, and one of the reasons that have been cited or have been found is lack of access to decent job opportunities in the formal sector. There's also a OECD working paper which shows that alongside access to finance, which is actually a common factor across gender, female human capital, which is both education and the human capital that they gain through participating in the labor force participation, are key factors which determine female entrepreneurship in India. So this basically just highlights that you cannot look at one aspect of women's economic inclusion in isolation, that everything is connected. So their participation in the labor market, whether they're financially included, whether they own businesses, it all links with each other. In terms of the informal and the formal sector in India, more than 90% of workers in India are hired informally, and females tend to be hired more informally, so less than 20% of workers in the formal sector are females. The other very surprising fact is that even the firms in the formal sector have been hiring more informally over time. So if you look at the chart on the right hand side, from 2004 to 2012, the share of informal employment even in the formal sector firms has gone up. So why is that happening? One of the key drivers of people hiring informally is because of the tight labor and product market regulations in India. So India has multiple labor laws. It's very difficult to fire workers. So firms prefer to hire informally instead. And in terms of starting businesses, it's not very easy to get permits and clearances. So people just prefer to operate informally. In other opportunities, females have lower average years of schooling, are paid lower wages for equal work. Unemployment rate of females is higher, and according to a survey, females contribute 10 times more to domestic work, which includes cooking, cleaning, childcare, elderly care, etc. So now we come to the question as to why should the policymakers care? Why should they care about women's financial inclusion? So I'm sure all of us know that the literature shows that more financial inclusion, and especially female financial inclusion, leads to lower poverty, lower inequality, higher growth. So what is different about the model that we use in this paper is that it builds a more comprehensive model which is able to interlink different sectors. So you have the labor market, you have entrepreneurs, you have banks providing finance, and then you also look at the household activity, and all of this contributes to GDP. We also have two types of participants in the model. So there are male workers, female workers, male firms, female-owned firms, and both the types of participants vary in certain factors in the economy. So for instance, the bargaining power at home of males is assumed to be higher. Females face safety concerns of going outside. They have lower skills. They have less ownership of collateral, and they face discrimination in employment. In terms of sectors, we have both the regulated formal sector and the informal sector. So you can either be hired formally or informally, or you can have a firm in the formal sector or in the informal sector. And how do these two sectors differ in the model is, in the formal sector, the cost of hiring and firing workers is more, cost of starting a business is higher, and collateral requirements are higher, as well as the formal sector being taxed. So starting with this framework, we look at the impact of three policies, or look at three scenarios. First is the financial access scenario, where we look at what happens to India when we increase access to finance for female entrepreneurs such that there are no gender gaps anymore. Then we look at the second scenario, which is called the deregulation scenario. In this scenario, we look at what happens if, along with no gender gaps in access to finance, you also have lower regulations in the formal labor market. So it is easier for firms to hire and fire workers in the formal sector. The third scenario we look at is called the skills scenario, where we look at, okay, what happens if, along with no gender gaps in access to finance, we also have no gender gaps in skill levels. So everyone has same average years of schooling. So just to quickly tell you how the model works. So you have this framework. You first calibrate the model such that it replicates the data that you can find right now. So you calibrate the model such that it matches the macro indicators of India, and it matches the existing gender gaps. You apply this policy change, so you shock the economy, and then you see, okay, what happens to the macro outcomes and what happens to gender gaps in the new equilibrium. So here we come to the results. So if you look at the scenario titled Financial Access, we find that when you increase females' access to finance such that there are no gender gaps, that there are more number of female entrepreneurs in the formal sector. So that goes up. Because overall entrepreneurship goes up, there's higher demand for labor, which leads to more labor force participation, and we find that female labor overall participation increases, so both males and females participate more, but females participate higher than males, and that's because female entrepreneurs do not discriminate between males and females. Increase in entrepreneurship, increase in employment leads to higher GDP, lower unemployment. However, what we find is that most of this new employment is generated informally. So even though firms are hiring more laborers, they're hiring them informally, and that's because the cost of hiring and firing workers is just so high if they do it on a formal basis. So that's why that brings us to the second scenario, where we look at, okay, what happens if we also now do not have such high hiring and firing costs? Here we find that not only does entrepreneurship of females increase, male entrepreneurship in the formal sector also goes up. Labor force participation goes up by much more of both males and females. GDP increases much higher, unemployment fall is much lower. And now we have a higher share of labor and output in the formal sector. However, what we find in this scenario is that males gain more. So even though employment has gone up, entrepreneurship has gone up, male increases much more. So actually gender gaps end up widening. So why is this happening? And again, this is happening because firms tend to hire more males, and that can be because females tend to have lower skill levels because of lower levels of education, or there is just straightforward discrimination. So which brings us to the third scenario, where we ask, okay, what if now we have no gender gaps in skills as well? In this scenario, we find that gender gaps not only in entrepreneurship, in labor force participation, and in share of formal employment goes down, and we find that the increase in GDP is much higher. It's close to 7% for India. So the key takeaways from this research was that you cannot think of only single sector intervention. So India has recently implemented, and Prabhat touched upon this, a lot of schemes and very good schemes. So there was the PMJDY, there's also the Mudra Yojana, there's also the Stand Up India, which provides credit to micro enterprises, and most of these credit have been provided to female entrepreneurs. However, you have to think of it as a more holistic strategy. So you have to interlink the labor market policies with the financial inclusion policies with the gender policies. So I think AFI is also recently doing a research on this. The link between the interlinkages between these policies is missing, and only if you think of it in a more holistic way will there actually be a bigger impact. So I think I would stop there. So thank you.
Thank you, Dr. Khera, for your very helpful and insightful presentation, and as well as highlighting the macroeconomic aspects and the microeconomic aspects of financial inclusion. And also very interested to see the model that you're proposing and that you're working on, and the interlinkages between gender gap, deregulation, and skills scenario. So it's interesting to see that even with deregulation, more men are coming into the process. But then you go into the skill level, and then you see that more women are empowered to come into financial access. So it is the report is fascinating, and thank you so much for sharing that. I also wanted to thank you for sharing the importance of human capital when it comes to women and their capacity building. So you highlighted a lot of very important information for us to think about and dwell over and to talk about. So thank you for your presentation. Now I'll go into our last speaker, but now last but not the least. Thank you so much, Dr. Clapper, for being here. Dr. Leora Clapper is a lead economist in the finance and private sector research team of the Development Research Group at World Bank. Her publications focus on corporate and household finance, banking, entrepreneurship, and risk management. Her current research studies the impact of digital financial services, especially for women. She's the founder of the Global Findex database, so an honor to have Dr. Clapper here. It's like a Bible for us, so we keep following it. So thank you so much for being here. And which measures how adults around the world save, borrow, make payments, and manage risk. Previously, she worked at the Board of Governors of the Federal Reserve System and Solomon Smith Barney. She holds a PhD in financial economics from New York University Stern School of Business. Dr. Clapper also had emailed me her blog yesterday that was posted on Brookings Institution's website, and so I'm fascinated that she's sharing that, and she'll talk about it. Yes.
Thank you again for the invitation to present, and I enjoyed listening to my colleagues. I'm going to sort of take a step back and give you sort of the broader picture on financial inclusion, especially for women, especially in South Asia. It's because really our passionate belief that you can't solve a problem if you can't measure it. And with that perspective in mind, we've been collecting the Global Findex data. It's collected with generous funding from the Bill and Melinda Gates Foundation, going forward also from the MasterCard Foundation, and in collaboration with Gallup, the global pollsters. So we had data in 2017 from 146 countries. And here's our map. Map's getting a lot darker over time. Financial inclusion is growing. In many places, really leveraging technology. In 2017, for example, we saw mobile money accounts spread from East Asia to West Africa and beyond. We see in India now 80% of adults having an account. That's on par with China as India leveraged the biometric identification to roll through the country, opening accounts. We also see darkening through Central Asia, for example, where also the government committed to their own initiatives to digitize their own payments, opening accounts for millions of adults. Let me go back to that really large caveat. So we see about 1.2 billion adults got an account since 2011, about 600 million women since 2011, about 250 million women in the past 3 years. About half of those women are in India. So of the new account, so India opened nearly 600 million new accounts since 2014, including about 170 million by women. That's a really big number. India won the Guinness Book of World Records for opening the most accounts in a single month. They slashed their gender gap from over 20 percentage points to 6. And so they really were effective in providing accounts to men, women, poor adults, rich adults. But they have a problem. The challenge, as we were discussing, is usage of the accounts. Over half of all accounts in India didn't have a single deposit or withdrawal in the past year. I'm sort of an optimist. I believe this is the world's biggest financial inclusion opportunity. As an interesting aside, we saw a surge in account ownership in China between 14 and 17. Again, usage was kind of low. Between 14 and 17, this surge in digital payments, digital usage of accounts in China as merchant payments grew astronomically. And so here the challenge is South Asia. Can the use cases, commercially viable, sustainable use cases for accounts be introduced, especially via digital platforms? So something really shocking in the 2017 data was this growing increase in the gender gap. As I mentioned, India slashed their gender gap, but it increased in many countries. And frighteningly, perhaps driven by technology. We look at, so let's take it for a step back. The gender gap has been flat at 9 percentage points since 2011. Although account ownership has grown, it's really been proportional between the men and women. And we've seen changes across regions as India and others slash their gaps. It's increased in a number of South Asian Middle Eastern and Central Asian countries. So economies that have seen inclusive growth. India, Indonesia has never had a gender gap in financial inclusion. Now about half of all men and women have accounts in that country. However, Bangladesh and Pakistan, for example, in the South Asian region, in Bangladesh, about 65% of men have an account, against only about 35% of women. And in Pakistan, men are about 4 times as likely as women to have an account. As you can see here, there's a number of other examples. In Turkey, since 2011, we see almost a 30 percentage point gender gap. And going back to your story, Turkey is an interesting example where, according to official data, about 70% of women are out of the labor force. It gets much harder designing case usages for women who don't have regular income. There we have to think about what kind of financial transactions are women making. Is it the kind of high frequency, low denomination payments for shopping, for bill payment and other household expenses? How can we design the appropriate financial products? And certainly, our belief that as we increase women's labor force participation, hopefully a natural, there'll be also a narrowing of the gender gap. But focusing in on, honing in on Pakistan and Bangladesh, let me just dig a little deeper into the data and offer some suggestions. What I'm showing here is the gender gap in account ownership. Apologies, the title seems to have fallen off. And so the turquoise bar was the gender gap in account ownership in 2014 versus the navy bar, the gender gap in account ownership in 2017. In Pakistan, for example, this gender gap has increased. What we found was the share of men with an account rose by 15 percentage points, and men are about now 5 times as likely as women to have an account. We'll get to it in the next slide. Bangladesh, here we see a surge in mobile money accounts. In particular, look at, if you could blow it up, we saw this surge in mobile money account by men, over 30 percentage points, but much more modest growth in mobile money accounts by women. And so we're having the challenge here of us leveraging technology for delivery of financial services in more cost-effective ways. As was mentioned, we asked the question to the unbanked, why don't you have an account? And we keep hearing it's too expensive, it's too hard for me to travel, even more especially for women who may have both, both more cultural constraints on her traveling by herself to the city as well as family responsibilities. Having local access to financial services is critical. And although there may not be a bank branch or ATM in many villages across Africa, across Asia, increasingly every village has a mobile agent who, in addition to selling minutes for the phone, is increasingly delivering financial services. However, what we're seeing, especially in Bangladesh, is women seem to be being left behind. And so what we can dig a little deeper into is mobile phone ownership. We ask a question, actually this is directly from the Gallup Core World Poll data, which is collected in association with Findex, so we can splice the data. We ask the question, do you have your own phone? And so we think a very good proxy for personal phone ownership. And here we start seeing gaps, not in all countries, but in many of the South Asian countries. In India, we see a gap, and the gap becomes much larger when we start looking at smartphone penetration. Bangladesh, Pakistan, and Bangladesh, where I've been working, where we hear the constraints, are women agents. There may be no women agents in Bangladesh, or certainly few. Are women, to activate your mobile money account, to load money up, you need to give your phone number to the agent. Are women comfortable giving their phone number to a strange man? Women go to establishments that tend to be mobile agents, which may be tobacco shops, other shops women may not frequent. There's a literacy, a numeracy challenge for many women. Bangladesh, for example, the more popular service requires a 10-digit code, which women may have trouble memorizing. It's also in English. So these are just the number of additional hurdles that women face in trying to use this technology. In Pakistan, in addition to challenging cultural norms, we simply find it might be a story of the household has limited income, and so therefore only the household head may spend the money to purchase a phone, or there may be cultural norms that prevent the woman from having it. My co-author Emily Breeze is doing great work in India, where they found in a survey work, that families thought that women who have their own phone are less chaste, or that phones are being used to arrange proper meetings. But all this really highlights that we need to focus on the access to the technology in the first place, as it's increasingly being used to deliver both government services, government payments, financial, and other services. So in Pakistan, we also collected new data on do you have a national ID? In most countries, most adults have a national ID. We don't see big gaps, with the exception of West Africa and some places in South Asia. For example, in Pakistan, we see a large gender gap in access to identification. When we ask a question, what was the most common reason you used your ID? A government service, a government payment, a financial service, a mobile service? I was surprised that by far the most common reason was to access a mobile service. As an interesting aside, in Bangladesh, for example, there's relaxed Know Your Customer AML requirements for bank accounts, but there's no relaxed KYC to purchase a SIMS card, which is necessary to have your own mobile money account. And so, looking at this holistically, challenge to women of not having identification, not having access to the phone, will lead to even greater gaps in access and usage of financial services. So yes, very quickly, I have 2 minutes to round up on some usage cases. As I mentioned, we really wanted to, we got into this business of collecting the data because we wanted to measure the challenges. I wanted to know how many women in Pakistan not only had an account, are unbanked. We find 99 million women in Pakistan, for example, are unbanked. Let's think about how can we deliver those financial services in more cost-effective ways. Regardless of the challenges I just discussed, 46 million women in Pakistan are unbanked and have their own mobile phone. Let's think about how can we, so this is a heat map. Those are the millions of adults who are unbanked and have their own phone, potentially creating the opportunities to deliver more cost-effective financial services. In South Asia alone, we see over 200 million unbanked adults with a mobile phone, including 35 million unbanked women. So just 2 examples that we discussed in the data. One, electronic wage payments. I actually took this photo. We're working with Bangladesh with garment factory workers who we migrated from cash to electronic wage payments and studied the impact of this move. Speaking with women, we had a woman tell us, my mother-in-law waited outside the gate for me on payday, now she can't. These women very quickly understood the ability of their account to give them greater privacy and control over their money. Women paid into an account, more than doubled their savings over an 18-month period, sent less money home to the villages, saved more themselves, purchased less gold, purchased less impulse purchases, and slowly increased their savings in their bank account. In South Asia, for example, there are 35 million unbanked adults receiving their private wages in cash, almost 70% of whom have their own phone. And finally, looking at agribusiness chains, I'm also working with tea pluckers in Sri Lanka. Similarly, women who pluck tea all month, often their husbands pick up their wages for them, really don't have control over the money, control over household budget decisions. I apologize, I didn't have time to go into the supportive literature and the importance to women of having their own account. Everything ranging from increased household spending on education, nutritious food. Great study in the Philippines that when you offer a woman an account, the household's more likely to buy a washing machine. The woman has more say over the household budget decisions. Here in Sri Lanka, for example, we can think about India. So the opportunity of paying, certainly a lot of farmers selling are in the informal sector, but increasingly selling to agribusiness chains. Think tea, cocoa, coffee throughout Africa and Asia. By paying these farmers directly, these women directly into an account, it's the first step, putting their foot into the formal financial sector, where they could receive the whole menu of additional financial services which farmers need, ranging from saving for the next season, stretching their money to the next harvest while meeting monthly expenses, access to insurance, appropriate credit, and other services. It can also, just ending with India, create use cases. And so, for example, in India, where all these accounts have been opened but aren't being used, there are over 65 million banked adults in India who are receiving agricultural payments in cash, 70% of whom have a mobile phone. And so I think our challenge here is to create the appropriate and design the appropriate products for women to access and use their accounts. Thank you.
Thank you, Dr. Clapper, for your detailed analysis of the gender gap across countries. as shown in the Global Findex, as well as for highlighting how to address the hurdles through cost-effective financial services, as well as ensuring that there are women agents in place so that women are comfortable in ensuring that they're able to manage their finances, and also to ensure that the regulatory framework is right there, the appropriate measures are in there so that women have more access to the financial account, as well as ensure that there are numeracy and literacy training, as well as digital literacy training. And so with that, I close the panel right now, and I would like to, I think we are running about 2 minutes behind time. So I wouldn't go much into the closing right now. We can come back to it, but I'd love to open the floor for questions, and then we can come back and the panelists can give closing remarks. So we open up the floor for questions. So go ahead, we'll ask in 3 questions first, and then we'll give the panelists an opportunity to answer the questions, and we can come back to more. Go ahead.
Thanks very much for the presentations. My question is around the way in which the data was analyzed. Did you look at whether or not there was a difference between urban and rural inclusion of women? Just because I imagine the interventions would be very different in trying to increase participation in the rural area. I think touched on it briefly on the fact that there are no ATMs in rural areas. So how do you build the model around that knowledge? There's quite a different access, as well as what the gap is like in the rural and urban areas. I'm curious about that.
And can we go to we'll ask 3 questions? Yeah, go ahead with the second question.
Hi there, my name's Ella from the Bretton Woods Project. Something that was mentioned briefly was women's unpaid care work. We know that obviously women disproportionately have the burden of most unpaid care work. This is a huge issue for women's equality and doesn't seem to be part of this conversation. So I would challenge the panel in saying, can financial inclusion address that glaring issue, or can it sometimes undermine as well? Thank you.
And go ahead, please.
Hi, I'm Sonia Kelly from the U.S. Department of State, and I'm really fascinated by the theme of economic inclusion that was echoed among the panelists, and thinking about financial inclusion and economic inclusion, wondering about universal financial access with regards to the sequencing. Like, would it be more effective to just really focus on the economic inclusion and getting women into the workforce first, and then does financial inclusion naturally follow? Like, what's the causal chain here? And I'm sure any of you could comment on that. Thanks.
So I'll go ahead and open the floor for questions. The first question is about the urban and rural area, the model around the urban and rural area, and if there are any models out there to that regard. The second one is about unpaid care work. And to that, I would also add migrants, if when you're answering your questions, if you could talk about migrants and their situation with regard to financial inclusion. And thirdly, with regard to the economic empowerment and being a causal effect of financial inclusion. So if you could just go ahead and answer the questions, that'll be very good. Thank you. I'll start with Leora first. Go ahead. Yeah.
Thank you. So in regard to the rural question, yes, there's certainly larger gaps, both men and women in rural areas, although that's very often highly correlated with income, right? So certainly we know there's often income gaps, which are exacerbated by rural. You also see differences in income patterns. In the cities, adults are more likely to receive a regular income, often either into an account or have a reason for an account, whereas in rural areas, people have less steady, irregular income. One could argue an account is even more important to help them manage those income streams. Just in regard to the last question on economic inequality, there is a literature showing the relationship between having an account and, for example, women investing in their businesses, or having an account among women farmers, and increasing their yields and purchasing insurance products and being able to better manage their risk. And so, as I mentioned, I think without question, we're not going to eliminate the gap until we make progress on the gap in labor force participation. However, I very much believe that having an account allows households and women to save, to invest in opportunities, be them business opportunities, investments in their education or businesses, or savings. And so I don't think we should wait to narrow the labor gap to address the gender gap in financial inclusion. And certainly it can help. Access to financial services can also help women's economic empowerment. Thank you.
There's one thing I wanted to add about this rural-urban gap, which is that rural-urban gap, of course, is a reality around the world, and that is because also of the ability or inability to find a viable business model to offer services in less dense, densely populated areas. And one of the things that Government of India did, with regard to telecom access, for example, in last 15 years, was to set up a Universal Services Obligation Fund. So all mobile companies will contribute some money into that, and the idea was that that money will be then subsidized services in rural areas which were otherwise not viable. But unfortunately, that remained at the idea level. Government collected almost $10 billion into that fund, and it was never used. Of course, digital kind of technologies which help you overcome, okay, you don't have an ATM, you don't have a bank branch, still you can access services. But then the question of client capability comes, the point I was talking about.
So I'll just follow up on the economic empowerment and financial inclusion, and focusing really on the work that my husband and I are doing in Africa. What comes to mind is the fact that what we wanted to do, and we did, was make sure that the cow and now goat program was really led by the women in the community, and that was a little difficult to overcome, but it happened. But what we also did was make sure that the kind of education that goes along with maintaining the cow, the goat, and the finances, we found a local veterinarian who was who also had her MBA. And so her goal was to teach them how to take care of the cow, but also how to manage the finances when they were selling the milk, so that their daughters could then go to school. So there was an evolution in terms of that. In terms of the, this is definitely the issue, the unpaid, uncare, I think.
Unpaid care, right?
Yes. What I thought, again, was thinking about the issue of just the cash economy that we were dealing with in many places, but in New Orleans, and how can we figure out what that financial impact of folks who are in the cash economy, what is it, how can we get to it, and what kind of proxies can we come up with? So that's what I'm working on now, and trying to look at the MasterCard transaction information, and trying to look at in and outside particular neighborhoods that are high risk, that are cash economies, to try to see if we can get a better handle on that.
So I think I'll address one question at a time. So I'll start with the first question, which was on urban and rural. And as Leora and Prabhat pointed out, that rural gaps are much higher when it comes to financial inclusion. But actually, what is also interesting is that in the labor market, actually, the gaps are higher in urban areas. So, and why is that? So, for instance, the labor force participation gaps are actually higher. And that could be, and what the literature has seen is that could be because of the income effect. So people have higher incomes, so females don't need to work in the house. There's no desperate need to work, whereas you don't find that in rural areas. So yes, of course, those differences are there, and I completely agree with you on the fact that you have to look at it a little differently. But when it comes to the model that I use, I do not have that differentiation, because already the model is quite big. So it was just not possible. But I completely agree with you that those differences, so I took everything at an average level for the entire economy. In terms of the unpaid care work, so yes, that's a very big issue, that females contribute a lot of time to unpaid care work, and that could be driven by social norms, cultural norms, etc., that females tend to do more of that work in comparison to males, and that takes up a lot of their resources and time. So there is a lot of argument in gender economics where they say that even homework should be counted in GDP, because that contributes to childcare, and that you cannot just ignore it. But even policies, so this is the point of having a more holistic strategy. So even policies like maternity leave and for instance, I was in a round table yesterday and there was this delegate from Sweden who was talking about how they were able to improve females' financial inclusion, and they implemented policies in the 70s where they had paid maternity leave, paid public maternity leave for females, plus recently they also implemented compulsory parental leave for both sets of parents, so that they both leave the labor market for a certain period of time, and it's necessary for both of them to lose that opportunity. So these kind of policies can come in and help with that in terms of the gender gaps. In terms of the sequencing of the policies, as Leora pointed out, it's not really the sequencing, it has to happen simultaneously, because a lot of these policies are long-term policies in any case. So it's not like it, first of all, it takes time to implement those policies because it usually requires legal changes, etc. And also it takes time for those policies to actually show an impact. So it has to happen simultaneously. For instance, India simultaneously adopted 3 policies, which was called the JAM, which is the PMJDY, which was the financial inclusion, Aadhaar, which was a unique biometric identification number, and a digital identity strategy. If they would have done one or the other, the full benefits, again, to maximize the benefits from it, right? So it has to all happen together. So it's very difficult to say in terms of sequencing what's more important. But I mean, it has to happen simultaneously. It's going to take time in any case. Thank you.
I just want to add a small point about the economic inclusion question. I absolutely agree that, you know, we need to shift focus on the economic inclusion, but that also requires a lot of shifts, you know, amongst the institutions. For example, let's say when you talk about the World Bank and IMF kind of bodies, or the bilateral, multilateral, you know, institutions, they often work with either governments or with the private sector. We have seen in last 10 years a decreasing space for, say, civil society organizations, and those are the ones who can actually work on the economic inclusion side. So there is a need to kind of, you know, invest more on that side, so that you can, you know, the Grameen Mitra example that I was sharing, all these Grameen Mitras are educated young women from the community in the village, but they were not productively employed. They had no opportunity in the village. So this opportunity kind of, you know, brings them into that one economic opportunity that they can leverage and, you know, be more economically active. And there's need for many more such initiatives.
Yeah, I also wanted to just add to that economic inclusion question. We have, with the Virginia Gildersleeve International Fund, the project that we fund, we go from the economic empowerment angle first. And we have seen that when we build the women's capacity to manage their own businesses, they go into a different level when it comes to the efficiency to manage their finances. So, you know, I totally agree with you. That aspect is very important, and one leading to the other is very important. So thank you all. And I will go to the next set of questions, so we can have 3 more questions if you have. Go ahead.
Hi, my name is Ezra Mannix, the Center for Financial Inclusion at Action. Among other things, I manage our blog. I was just wondering, and this is not a question on the record or anything, but any comments from anybody on the new leadership at the World Bank Group and what effect that might have on Universal Financial Access 2020 programming, and how and can victory and will victory be declared? Thanks.
Go ahead. Yes.
Hi, Bryce Senna with SW4 Insights, a public policy advisory firm. I'm just curious. I've heard a lot during the presentations about educating the women in these countries about the importance of financial literacy and inclusion. I've not heard as much about informing the men in their lives about why it's necessary to have these women have access to all these things, because all it takes is one father, husband, brother, etc. to derail all this. So just curious how important that is as well, and what's being done on that front.
I think we only have time for 2 questions. We have got 1 more minute to go. So go ahead, and if you could just answer your questions, and we can do wrap up quickly. Yeah. Leora, you want to go ahead? Yes.
Sure. I mean, I have no comments on the first question, but the second question is actually something really important. Specifically, how can you incentivize men to support women's inclusive access to financial services? And there definitely are projects being done along those lines. Interestingly, some of which are late. So we have a long now experience showing the benefits often of paying some government transfer payments directly to women as opposed to the household head, and finding it magnifies the impact of the services. For example, education payments for keeping kids in school, for example, and having the husband understand that the woman needs an account to receive those payments to herself, and that money will be used for the household is often one way of getting that account there. However, that clearly needs to be partnered with teaching the women to manage the money themselves, explaining to the women that you don't have to you shouldn't share your PIN number with other people or your debit card, and how to teach women to manage the money and get a more comfortable seat at the table now that she has greater control over some of the money that's in her bank account as opposed to in cash, which is easier for other household members to have access to. Thank you.
Do you have anything to add? Okay, good. I think it's going to be a no comment on the first question, but because I don't have enough information. But I just think in terms of the education of men, I think what it comes down to is proofs in the pudding, if I could just say it that way. That I remember my mom didn't have a driver's license and didn't have her own account, and we lived in rural upstate New York. And I think what it came down to was a matter of convenience, right? So after a time, it was what can be done to make things better for the family. So I'm not sure we can just say, here's a program for men to kind of be more awake. But I think that it just, how is it going to benefit the family? I think that, and again, I'm going to just point to the thing that we did in Kenya. It was very difficult because I went there with my husband, and when we were starting the program, they said, well, when is Mr. Thompson going to speak? And I said, he's not going to. This is my program. So I think what happens is sometimes the people who are bringing the resources may have to change with and explain and present information in a different way. But also when it comes to when we go back and we identify what's going on, we have to have eyes on locally as well.
Okay, good. Lyra has one more to.
Yeah, just a follow-up. So two things. One is we do see in countries where the cost of banking services are higher, more women saying, I use somebody else's account. And so, that's something systemic we need to work on. And there are a number of Latin American countries, for example, where banking services are so expensive, it just doesn't make sense for more than one household member to have an account, and therefore it often falls on that of the husbands. So if we can make banking services more affordable and accessible, such as leveraging technology, it is going to be more likely that the husband may, be more tolerant of his wife and daughters, for example, having accounts. I'll have to leave it at that. Thank you.
I think very quickly, this is my personal opinion, but also I think the way financial literacy and digital literacy, the topics that we've stressed upon, the way it's given should also change. So I agree with you on the fact that maybe if there is a male and female in the household, both should be gotten together. The male should also realize the benefit of the female having financial literacy, using financial accounts for the benefit of the entire household. So I think it has to come together so that the female also feels more confident when she's using these services and she's more supported. So yes, I mean, that can be taken into account in that sense. But again, as the statistic says, it's the females who are lagging behind. So more focus is going there in our conversation today. Thank you.
Okay, thank you all. I don't think we have time for any more questions, so just wanted to thank our panelists for the excellent presentations and for highlighting the importance of big data, small data, deregulation, human capital, and ensuring that women have equal access to opportunity as well as economic empowerment. So we are thrilled to be here. When we talked earlier, we had talked about call to action. I had requested all speakers if they could share one line about, the call to action going from here. What is it that they would want the civil society to take on? Because this is a civil society forum. So go ahead if you have one line each, if you want to just do a call to action.
Building women's financial capability and confidence to use financial services responsibly.
I'll make that too. Create more space for civil society organizations, and that should and invest more in customer empowerment. especially addressing things like gender gaps and rural-urban divide and whatever kind of divide you have to address that. So investment for that.
Engage universities and make sure that the students who you're trying to empower, encourage, and understand the benefit of this work, you get them early, often, and for free.
I think I'll just, the last takeaway from my paper, so it's to have a more holistic strategy. So not an isolated gender policy, gender inclusion policy, and an isolated financial inclusion policy. It should all be interlinked, because otherwise you won't gain the maximum benefits that you can with any policy.
All right, on that note, we close. Thank you all for being here, and thank you to all our participants and panelists. Thank you.